Hi, it's Mark here from Cube Consultancy, and I'm going to be answering 28 of your questions which you posted on our Instagram. So the first question we've got is, what record should I keep? So with a limited company, we try and set most of the limited companies up on Xero or QuickBooks or one of the accounting softwares, and we try and get all the invoices or receipts attached to it. So you've got everything in one place. If you're a sole trader, then you need to keep all your expenses that you paid on your business, as well as any sales invoices and definitely bank statements. I always try and encourage everyone on sole traders to set up a business account specifically for their sole trader business, and then we can track all the expenses in there. So the next question is, should I register for VAT? When you think about VAT, you have to be VAT registered if your turnover goes over 85,000, but you can register from day one, even before you started trading. You will then charge 20% on top of your sales, and you'll also be able to reclaim any VATable expenses. When you are below the threshold, the main things to think about are if your customers are VAT registered, because then you won't be 20% more expensive because they'll be able to reclaim it, and also if you do have a lot of VATable expenses. If you do, then it's definitely worth registering before you reach the threshold. And the other thing to think about is the perception. Often if you're trying to attract larger customers, you might want to be VAT registered because your customers would assume you would be, and you'd have met that threshold. So it's worth thinking about your customers as the end game when you think about VAT. Right, so the next question is, can you run a business without employees? This is quite an interesting one because it's covered in IR35. So this is where you are taking on contractors and freelancers rather than staff. HMRC are trying to close down on it. There's certain conditions that need to be met, but more often than not, people will hire freelancers on a short-term contract and then they're not employees of the business. If that's the case, you just need to make sure that you are ticking all the boxes, because the emphasis is now on the employer rather than the contractor. Previously, the contractor, if found to be an employee, would be liable for the tax. That's now changed. So as the person hiring these freelancers, you really need to fill in the questionnaire, which is on HMRC's website, answering the various questions to make sure that they are actual freelancers and not employees. It's becoming really important in the freelance sector, but now into construction as well. Does being a business owner give you a better chance with moving abroad? I'm not entirely sure what it means, but if it's a limited company in the UK, then yeah, you can move abroad, and you can trade from abroad. So we spoke about people moving to Dubai, for instance. If you have your UK limited company and you decide to trade from Dubai, your limited company will still be subject to UK corporation tax. So that might not be the best situation for you, especially if you are operating it from a lower tax region. It might be better to set the company up in that region. If you're a sole trader and you're going to set us up abroad, then you will again fill in this form, the P85 form, which allows you to be taxed outside the UK tax regime, and could be a lot more beneficial. So again, that's definitely something you want to speak to us about. Ask the question, tell us everything about it, and then we can give the best advice. What's the best way to extract money from a business? So with a limited company, for a director, the best way is still through a small salary to take advantage of your personal allowance, and then the rest is dividend. Them dividends are then declared on your self-assessment. If, however, you have another job where you're in a full-time with PAYE, that means your personal allowance has already been taken up. So you wouldn't do another payroll within your limited company, you just take a dividend. When we do your self-assessment at the end of the year, we'd include the P60 from your full-time job and then any dividends you've taken from your company. So the next one is, how do I improve my cash flow? Cash flow is improved by better margins on your sales. So increasing your prices will instantly help you with your profit margins, and then reducing costs. So that might be finding a new supplier if you are selling products, reducing wages of staff, or removing staff if you believe that you can do it with less staff. That will improve the margins. But yeah, whenever you think about the cash flow, you need to think about selling for more and collecting that cash quicker, and then working on the credit terms of your products or services as well. Next one is, how does research and development affect my tax deductions? So this is quite a popular one. Loads of people are receiving emails from so many firms out there that are trying to help with R&D claims. It is becoming more stringent by the government, but this government is definitely encouraging research and development, wants to be innovative UK. It wants everyone to be out there trying to get into new sectors and developing that sector. The criteria is that you need to be making an innovative addition to a product, service, whatever it might be, but it needs to be kind of new. You need to be able to allocate costs. There's lots of little criteria that need to be thought about. The other thing that HMRC and the government are asking for is a lot more detail on the project. So we found ourselves recently preparing some quite detailed reports, and that breaks down the project, the outcome, why we were able to deliver it, or our customer was able to deliver it. And that's made it easier to get these claims through. They are taking a longer time. HMRC have put more people on it, but in terms of the tax benefit, it massively reduces your tax liability, and it can sometimes result in a tax credit where the HMRC will make a payment to your account to carry on the project.
Cool.
So one of the questions here is, before you said you would go limited when you hit the 50,000 mark. Why that number? Why not lower? The main reason is that as a sole trader, you get the benefit of your personal allowance. That's if you haven't got a PAYE job and you've already used that elsewhere. If you don't have that and you just have your sole trader business, if you get £50,000 of profit, then you take away the 12,500 and you only pay tax on that. With a limited company, you pay corporation tax from £1 profit. So there's a trigger point of when that becomes beneficial. When you think about people, there's a lot of youngsters out there that have a full-time job and have set up little side businesses, little side hustles that they have. They really need to think about the structure that they want for that. Depending on their PAYE job, it might be a limited company is the best route if they've already hit that 50k threshold. If not, then maybe sole trader. So it's definitely worth reaching out to us and having a chat. The next one is, if I give items to my company, does the company owe me money? Yes. This is like introducing capital. So it's the same as introducing 100,000 as a director to a business. You are owed that money back. It's like a loan from me to you. If you're introducing equipment, let's say camera equipment or vehicles or tools, whatever that might be, you can transfer that into the business and that will be your capital. You are owed that back for whatever the market rate is of when you transfer it in. So it's definitely worth thinking about. We always tell directors when they are setting up to think about any costs that they've incurred on behalf of the business in the lead up to it, and also what they've introduced. Again, vehicles, tools, any kind of equipment that you've introduced, and then you can get that back tax free when the company's making profit.
So I got a question.
Next one. What business expenses can I deduct? Whenever you think about business expenses, you should think about any costs that you've incurred which enables you to deliver the income that your sole trader or your limited company delivers. So it might be selling products. So you might buy something for X and then sell it for X plus profit. That is all deductible. You might include your travel. So that traveling to a client, traveling to a customer, any expenses that you might incur to do that. Paying your staff, obviously, but any direct costs that you can think of that's enabled you to make the business run, and any administration costs. So the next question is, why are all my friends working and living in Dubai? Um, it might have something to do with the tax rates over there. They are very favourable for people that are moving over there. There is conditions, obviously. You need to, there's criteria you have to meet over there. They have, however, introduced recently some tax rates into Dubai, but I think that's only on income earned within Dubai. So if you're still being paid from the UK over to Dubai, I think the tax rates are definitely going to be more favourable. So that's why I found a lot of our clients as well have recently moved over there. Why are pensions relevant? So pensions are a great way for a company director to get cash out of the business. It's tax deductible. It allows you to take more income out of the business and put it into your future. We don't give advice on that, but we do have IFAs that we work with that can help on that side. Okay, yeah. What is the best way to extract money from a business? I'm going to assume it's a limited company, because a sole trader just means the profit is yours. So the best way is still to take a small salary to take advantage of your personal allowance. That is normally about 9,800. Actually, I'll keep that bit off because I'll do that one again. What is the best way to extract money from a business? I'm going to assume it's on a limited company. So the best way to do that is, again, through a small salary to take advantage of your personal allowance, and then the rest is dividend. You will then declare that amount on your self-assessment at the end of the year. You'll be paying corporation tax on the profit, and you can only take dividend from profits of the company, i.e. there can't be more dividends taken out than there has been profit within the company. So when is it best to become a limited company, not a sole trader? That depends on profit. So if your profit is going to be over 50,000, you want to start thinking about a limited company, and also the type of trade you're in. Limited companies provide that assurance and limited liability, which means if anything goes wrong, it's the company rather than yourself. So you want to think about the sector you're in, the clients you're trying to attract, and the profit levels, and you think about when you should trigger that. If I own a business, is it better to give yourself an annual salary or take out director's dividends? Are they the same? What are the differences? Yeah, so the annual salary, again, depends on your circumstances. So if you are in a PAYE job somewhere else, then again, I would definitely not take a salary from your company because you're going to be paying more tax. Dividends, if you can, you could take them dividends monthly. That always works best for us in terms of calculating your personal allowances and your personal tax liability with dividends. But I always encourage clients to just, take what they need, and then we do the dividends and the board minutes at the end of the year, so it covers all the paperwork. But yeah, if you can budget and take out what you need each month, it just works out better for everyone in terms of accounting. When should I pay estimated taxes? So as a sole trader, if your tax bill is over £1,000, you will be asked to pay 50% up front in January, 50% again in July, and then when we file your tax return, you'll either be owed something or you will owe something to HMRC. We try and get as many self-assessments done as we can before July, so we know that estimation of payment on account, and you can kind of get rid of the one in July, and then we know what your year end is tax-wise, and you can pay that by January, the following January. So the next question is, what's changed this year in regards to tax and business owning? I'm not entirely sure what they mean by business owning, but if that might be dividends, it's reduced. You used to get 2,000 tax-free, it's now gone down to 1,000, and from 24-25 it's going to go down to 500. Corporation tax has changed as well, so it's 19% up to 50,000 profit, so that is on profit still, where everyone else has been used with 19% the whole way through. It's then 25% on profit over 250,000, and that little a little bit of profit in between, it's taxed at 26.5%. That's the marginal rate. So there has been a significant increase in this tax. I mean, it's been warned for a while, but it's here now. So the next one is there any other ways to lower your tax? Tough one. I would always make sure that you are putting as many expenses through your business account, that you're not purchasing things on your personal account for the business, because often we found some clients that are doing that, and then when we get to the year end, we don't know about these costs, so you're missing out on that benefit. I would take advantage of the pension allowance as well, so I would definitely set up a director's pension. That will reduce your corporation tax, and it's also beneficial for the directors. Yeah, the main thing is thinking about the costs and planning. And if it does get to a stage where you have got a lot of profit, we tend to work with our clients on a monthly basis, so we can look at the P&L and say, listen, there is quite a lot of profit here. You might want to think about making some capital purchases. That's the kind of advice you want to make before the end of the tax year or your limited company year, so you can purchase these goods and develop the company into the next year. How can I better manage my cash flow? Cash flow becomes very important for limited companies because you'll have expenses like your VAT, rent, let's say, because that might be quarterly. We try and encourage all our clients to use Xero and the softwares out there as much as possible to plan out their month, their year, their quarter, because it will allow them to then know what's coming in, when they need to collect all their income. If they have an expensive month coming up, month 3, then they really need to have a revenue drive and collect the credit control and get the invoices paid so they can satisfy all the bills. Companies often don't think about cash flow as much as they should. It's one of the key things. You've often heard the phrase cash is king. It really is, especially with the cost of living going up. So you really need to think about expenses coming in, try and work some bills into longer payment plans if possible, if there is an issue of cash flow. HMRC are definitely working with businesses in terms of cash flow as well, and they're often giving payment plans up to 24 months, so it might be something that's worth thinking about because it's relatively cheap cash flow for a business. Okay, yeah, this is a very popular one now. So what are the tax and financial logistics when working abroad? More and more people are used to working from home or just working from their laptop. So a lot of people are starting to now relocate. I mean, all over the world. We've got clients literally in all corners of the world now. When you are leaving the UK, you need to think about your tax situation for the prior year and all them post years. We need to kind of know an estimate of when you're going to be back in the country, if you're going to be working in the country, in the UK this is, and then we fill in a form called a P85 form, and that we send off to HMRC, and that will then trigger, provided you meet the criteria, that you don't need to pay tax in the UK. This is definitely worth an in-depth conversation and planning. There's lots of things you need to think about, down to the fact of, do you have access to a property here when you're back here? Does your parents live here? Is your wife and children going to be moving abroad with you? There's lots of different elements to think about with that, so it's worth booking an appointment to have a chat. What benefits are there being a business owner? So besides the tax benefits that we've spoken about in terms of reduction in tax rates for limited companies versus sole traders, whenever that pinch point is, the other benefit is the limited liability, which means that if there was an issue, I was thinking about a restaurant and someone got food poisoning, they would be suing the company rather than the individual that owns that business. It just gives you that layer of protection. If for whatever circumstances the company needs to close down as well, or is unable to meet its liabilities and pay bills or tax for that, the company can put that, the individual can put the company into liquidation. As a sole trader, that's not a possibility. You will be liable for your income tax on that. So it's worth thinking about that as well. How can you help grow my business? The main thing we try to do is work with customers, whatever their goal is. If it's to buy an office, if it's to get into a different market, a different sector, employ staff, we try and work with them to help them achieve that goal, looking at their cash flow, looking at their sales, looking at break even, pinch points, and then seeing where there might be value. So analysing costs, where you've spent some money on marketing, has it resulted in more income? A different marketing campaign has. So the next question is, how do people get huge loans from the bank? The banks are reluctant to give loans to new companies, especially in these times as well. So the best way to get loans for a business is track record. So consistency of showing profit, consistency of year-end accounts being filed on time, meeting them liabilities, corporation tax, VAT, your customers. Your limited company will have a credit rating, similar to yourself as a personal credit rating. Your limited company has one as well. This is searched, and this is based on factors like, has your company profit gone up? Are you taking too much out of the business? Are you able to meet your current liabilities, which means is your debtors covering your current liabilities, like supplier payments? There's lots of little factors. With banks though, you always find that when you don't need the money, that's when they are there to give you the money. If you are looking for funding on a new project, then that really needs a detailed business plan, and that will cover financials as well as all other aspects of the business and why you think it's going to succeed. We've done this with quite a few new startups, and that'll be based on the director's history, their experience in that sector. There's lots of factors on that, so that's worth reaching out to us for. So the next question is, if I start charging people rent, how does that affect me financially? I'm assuming this is going to be a sole trader, so this might be someone that's got a full-time PAYE job. They might even have their own limited company, and then they start renting out an additional property, or maybe even a room in their house. There's some relief for that, because there is rent a room relief, so you definitely need to reach out to us on that. But if it's just going to be a property you've taken on and you start renting it, then you're going to need to register with HMRC and start filing your self-assessment and paying the tax on that additional rent. Rules have changed in terms of what's allowable on interest on your mortgage payments and what costs are allowable. Again, they're closing down on what you can deduct from this rental income, so it's worth reaching out so we can help you with that.
I've got a question actually.
Yeah. So next question is, what is break even and why is it important? Break even is the point in which your total costs are covered by your sales. It's a key calculation to kind of work out, especially if you are building something. So let's say you're building a car. You need to know all them costs, what it needs to sell for, how many you need to sell to cover all the costs of that break even. You need to think about the fixed costs, which is your rent, things that doesn't matter if you build more. And then you think about the variable costs, which might be your salaries, which might be purchasing more materials. You need to think about all them costs coming into it, and that's the break even point of which you then start making profit as a company.
Okay.
Thanks everyone, I hope that was useful. We're going to be answering more of your questions going forward, so keep sending them in. Thanks.